Manishi, it's not just Chinese consumption, it's Asian consumption and reopening, right? So are you focusing more on those retail names, on those consumer discretionary sectors?
A combination of them, I would say. Consumer discretionary, and that includes the e-commerce and internet and gaming names, would possibly be the biggest beneficiary of China reopening. We have had 2 to 3 years of depressed consumption. Sentiment is clearly improving, and even on-the-ground numbers, looking at the mobility data or the tourist movement within China, and that's beginning to happen outside China as well, clearly bodes well for the consumption story going forward. So we would think consumer discretionaries, restaurant chains, e-commerce, internet would all be beneficiaries of, of that change in sentiment.
Which is why you've upgraded China recently, but you've also downgraded a couple of markets. Tell us about those.
We upgraded China to an overweight. That stance was kind of obvious after the China pivot came through in November. We funded that position by downgrading India and Indonesia. India was at that time one of the most expensive. It still remains so in the Asian investment universe. The relative valuations were more than 2 standard deviations higher than the long-term average. And at the same time, we do expect some earnings downgrades in India going forward, particularly in consumer staples, to some extent in consumer discretionaries, and possibly in the commodities universe as well. Indonesia was also looking kind of toppish after a severe outperformance over 2022. And we expected the energy prices to sort of peak out, which could dampen sentiment over there.
In terms of EM markets that you do like, we have the US dollar giving a bit of a tailwind to EM stocks at the moment. So with that in mind,
right,
which EM markets look appealing to you right now?
We are overweight China, Hong Kong, and Thailand. One of the strongest themes that we are playing across Asia is Asian reopening. China and Hong Kong are the clear beneficiaries, but that benefit is spilling over into Thai tourism as well. We are currently neutral India, Korea, Indonesia in the ASEAN segment, and we are underweight Taiwan, Malaysia, and a couple of other smaller markets. Apart from the themes that I mentioned, Asian reopening and consumption recovery, we're also positive financials, even though the yields seem to have peaked out for now. But there are different tailwinds to financials in different pockets. So in case of China, it's consumption recovery. In case of India, private banks gaining market share and having the cleanest balance sheets ever. And in case of North Asia, particularly Korea, some degree of additional net interest margin improvement as yields continue to stay buoyant.
We've heard a lot of rhetoric out of China about supporting the property market, a number of measures being taken as well, but I understand you're still cautious. Why is that?
We think the balance sheets of the property companies on the whole still remain stretched, and we're not seeing that momentum in terms of property sales or property price recovery. We think for a sustainable recovery in the property market, one would have to give it significant amount of time for the excess inventory to get absorbed, and and some degree of significant balance sheet repair is still necessary in that sector.